Welcome, everyone. Thank you for joining us for this Ag Finance Community of Practice webinar on Regenerative Agriculture in Practice, what FSPs need to know. I'm Jenny Berg, Community of Practice Lead at Opportunity International Ag Finance, and I'm really delighted to be hosting today's conversation. As we get started, please feel free to introduce yourself in the chat so we can see who's with us and where you're joining from. So today we are diving into regenerative agriculture, or Regen Ag, and why it matters for FSPs. And the reason we're discussing this topic is that the smallholder farmers that you and that we work with every day are feeling the pressure of a changing climate. Rainy seasons are less predictable, droughts and floods are more frequent, harvests become uncertain, incomes become unstable, and when farmers' livelihoods are at risk, so are the portfolios of the FSPs that serve them. Regen Ag offers a response. By rebuilding soil health and strengthening resilience to extreme weather, it helps farmers protect and even improve their yields over time. It also enhances biodiversity and supports sustainable long-term productivity. In the next hour, we'll explore what Regen Ag really looks like in practice, how it strengthens resilience, and how FSPs can actively support and promote these approaches. I'm delighted to introduce our speakers. First up, sorry, just got to bring that on the screen. There we go. First up, we have Sophia Watkins. Sophia is an economist and climate change expert and has been working with Opportunity since 2021 on climate strategy and on implementing Regen Ag with our country teams. She'll walk us through the principles and practices of Regen Ag, explain why it creates value for both farmers and FSPs, and introduce Opportunity's Regen Ag strategy and our pilot in Rwanda. Next, we will hear from Desiree Mugisha, Project Coordinator at Opportunity in Rwanda. Desiree manages the Farmer Support Agent Network and farmer training and leads our Regen Ag work on the ground in Rwanda. He'll share what we've learned from the pilot and how our FSAs are an essential piece of the puzzle. Then we'll turn to Merkias Dusabumuremi, Managing Director of Clecam Ejo Heza in Rwanda, who will speak to the impact of Regen Ag on his institution and its portfolio. After that, Abed Sharif Muawenimana, Managing Director of Inkunga Finance, will share his institution's experience in promoting agroforestry, which is a cornerstone of regenerative practices. And finally, we'll hear from Sakina Mandanda, Opportunities Director of Microfinance in Africa. Sakina supports MFIs to design and scale inclusive and climate-smart financial solutions for farmers. She'll speak to the business case for investing in Regen Ag and preview some of the climate risk tools Opportunities developing to support FSPs in the coming year. After these presentations, we'll have time for your questions. Please feel free to share them in the chat or the Q&A at any point during the session. And if anything needs clarification along the way, just ask in the chat and we'll do our best to respond as we go. So let's get started. We'll begin with Sophia, followed by Desiree, and then Merkias. Sophia, the floor is yours.
Thank you, Jenny. I will share my screen. There we are. Can everyone see it?
Yes.
Brilliant. So yes, hi everyone. Welcome to our first ever COP. I'm very honored to be starting off this webinar and to have it be on how regenerative agriculture can improve climate resilience, one of my all-time favorite topics. So first, I wanted to give a quick overview of what is regenerative practices, what is regenerative agriculture, and how is it articulated. So the regenerative agriculture hinges on 5 main principles. To keep things practical today, though, I really want to focus on not just the principles in theory, but what does that look like in practice? What does that mean? So let's start it off. The first one is to minimize soil disturbance. The reason for this is that the soil structure is very, very important for a soil's ability to maintain both life and also moisture in the soil. So the first step is to try to minimize soil disturbance. How is this done? Through a reduction or getting rid of tilling entirely of the soil. Other things that can be done is to use planting stations. So you always plant in the same location or try to minimize the soil disturbance just to those locations where the crops are going into the ground. The other is to cut weeds at the soil surface. So in land preparation and also at time of weeding, instead of tilling, we're cutting weeds off right at the soil surface. And many times, unless they're invasive weeds, which need to be removed from the field, they can sit on top of that soil surface and also protect it, which is part 3. But on to part 2. The second principle of regenerative agriculture is to maximize crop diversity. What does this mean in practice? This means intercropping or having multi-cropping systems. It also means rotating crops. This is essential for pest management as well. And also nutrient balance of what crops take from the soil. So not planting the same crop year or season on season. The other is to diversify crop varieties. And finally, integrating traditional and indigenous plants that are particularly adept to growing in a certain region. The third principle is to keep the soil covered. This one is really important, especially in the places where most of us work, which has very, very high sunny and intense sunny periods. And yes, this includes keeping the soil covered, not just during the season, but trying to keep that soil covered and protected from the sun during the drought seasons. And this can be done through mulch, which is plant material on top of the soil, physically creating a physical barrier that protects the soil from the sun. It can also be done through cover crops. A common one is mukuna mukuna. I'll show an example of that was used in Rwanda to cover the soil through the dry season. And the other is green manure. So here you complement both the fertility injection into the soil, so improving fertility, while also using shrubs and plants to cover, living shrubs and plants to cover the soil and protect it from direct sunlight. Fourth principle is maintaining living roots year round. This is really helpful for soil structure and also erosion control. And this means plants that are in the ground for more than just the season. So this can be done and integrated through border planting, also planting on contours, which is a very effective way to slow water down, especially in very hilly areas. Contour trenches can also be built, and that's a common practice in many of the countries where we work. One of the favorites in the Regen Ag community is Gliricidia, because it's a tree that is very resilient. And it also is a legume. So it's in the family of beans and soy, which actually brings fertility into the soil, not just with its root system, but also its leaves are very high in nitrogen. And the tree itself can be cut back without killing it to reduce or eliminate shade on the crop, which obviously can impact the yields negatively. And these trees can actually be planted inside the field, which is very powerful without competing much with the crop. And finally, something Jenny has already alluded to, agroforestry is another powerful way to have roots in the ground all the time, but other things also like shrubs or grasses are powerful root systems to help prevent erosion and also maintain soil structure in the field. The final principle that encompasses regenerative agriculture is the integration of livestock. We've taken this one a little bit further and included local fertilizer production. And many times local fertilizer production includes some amount or is entirely based on animal manure or urine. Some of our favorite manures are, I say our favorite, you can tell we get into it, are things like chicken manure is particularly high in nitrogen, very, very high in nitrogen, and urine as well, very high in nitrogen. Some other local fertilizers really also come from finding what is done locally. What are local plants that are known to be high in nitrogen that can be used as something called green manure? And then, of course, keeping livestock is a powerful addition not only to income, but also to income diversification for a smallholder household. So I wanted to show a few examples in practice. What does this look like? On the top, we see mulching. This is very straightforward. In this case, it is a monocrop of cabbage, and the mulch is literally protecting the soil. It's creating a physical barrier that helps the soil keep moisture, but also keep its living organisms without direct sunlight. Also keeps the soil at a lower temperature, for example. That's very key. Next image, we have intercropping. Here we have corn or maize, and we also have a bean and Gliricidia in the field. And here you can see the Gliricidia hasn't been cut back yet because it's not posing a threat. In early development, sometimes some shade is actually very beneficial to the crops. And then as the crops get into their later growth stages, it can be cut back. So the shading is minimal to none. On the top right, we have a picture of a field covered through the drought season in green mukuna. This is a cover crop. You can see the field on the left of the same image is baked. It is completely dried out. This affects soil structure, affects soil fertility very negatively. So this is a strong example of how you can keep the soil covered through even the harshest drought seasons. On the bottom left, we see an example of what does slashing or slushing look like. This is the cutting off at the top of the soil instead of tilling. So this is the alternative practice to tilling. In the middle bottom, we have border planting. And again, here we can integrate a lot of agroforestry trees. In this case, we have Leucaena. It's really important to use local species. If we introduce any species, it's good to test them before. But a lot of what regenerative agriculture is about is leveraging local knowledge, leveraging local species, and figuring out not just what people from preferences, crop preferences, but also what are crops that are resilient and known to be resilient in the region. And this is one of the ways where we use this local knowledge is in picking agroforestry trees and grasses to increase biomass production in the region. And finally, I wanted to show an example of a compost pile. This has been one of our more popular practices in Rwanda, and it's a way to really extend if you don't have much availability of manure, which has been a common issue. You can make teas out of the manures. These teas are often can be used directly in top dressing, for example, or used in a compost pile, which really creates, it's like a multiplication effect of the amount of manure you have available to you. And the rest of the compost is made from dry and green materials, ideally high in nitrogen as well. Ash as well can be incorporated. And these compost piles are made looking at what is available locally. What are the inputs we can make compost piles with? Obviously, there are many other kinds of composting systems. And again, we try to make those decisions and those conversations rooted in what are the local preferences and what is locally available. So what does this mean? How are we backing it up one step? What does this mean for client resilience? It's really three main areas. We're looking at weather risk, we're looking at production and yields, and we're looking at their financial resilience. So on the weather risks, it's really about that erosion control. It's about the moisture management in the soil, and it's about the fertility improvements and the soil health. This improves the ability, especially around sensitive times like germination, of the soil to be able to, of those crops to be able to germinate, even if we have very unseasonable weather patterns, an unexpected week of no rains, for example. We can preserve and sometimes keep very, very high germination rates, even in unfavorable circumstances. The next one is production and yields. So here we're looking at a reduction in yield volatility and also increased pest and disease resistance because the plants themselves are more robust and healthier. The yields themselves are also not just higher, but higher quality. That was something that was very, very interesting to see play out in the field. Finally, financial. Multi-cropping also means multiple incomes, especially if you also have animal integration. And we also see a reduction in input reliance and costs. And when I mean about input reliance, we're really looking at the amount of synthetic fertilizer needed. Some of the fields have transitions to not need any synthetic fertilizer some seasons, which is pretty remarkable and a big indication of improved soil health. And also amount of seed. Because we're using more precision planting systems, we actually end up using less seed generally than traditional local conventional practices have been using. And obviously this leads to a much better profitability prognosis. Okay, one more step back. What does it mean for a financial system? Because that's what we're here to discuss, that relationship between regenerative agriculture and our financial systems. One is the credit worthiness and stability. So we have stronger borrower profiles through enhanced productivity and profitability. It's really important that it's both to us. So again, this is the reduced input costs. This is diversified revenues for multi-cropping systems, and then higher and more reliable yields over time as the soil health improves. Portfolio risk mitigation. So we're reducing long-term agricultural climate risks. So this is because, again, we're having the soil is building fertility and health. It increases water capture and storage of that soil, and also recharging the groundwater, which is a much bigger scale level beyond just one farm, but similarly very relevant to regional resilience. And again, enhanced resilience against extreme weather events, especially in places prone to erosion, for example. Finally, food security and exports. So now we're looking at supporting at a national resilience level and also improving export competitiveness. Sorry, long word. And this is a lot due to the quality of the crop again, which has come through in our pilot, and also the reduction of input dependency, which can be very destabilizing at a national level, as we have seen in the last few years. Of course, local food production. If we have multi-cropping systems, we tend to have also more local food production, and the ability to actually produce higher yields with these systems. So that's where my bit ends, and I'm very happy to hand over the baton to Desiree.
Yeah, thank you so much, Sophia, for taking us through the global picture of regenerative agriculture and how our organization is scaling up this approach of Regen Ag. So I'm going now to take you to Rwanda, where we have been piloting regenerative agriculture for the past 3 years. Our pilot in Rwanda started with side-by-side demonstration plots to compare conventional and regenerative practices. We tested our training manuals, trained champion farmers, farmer support agents, and farmers on the ground, and facilitate them to establish a trial plots, and introduced several techniques like minimum tillage, mulching, intercropping, crop rotation, and even integration of agroforestry trees. And also making some kind of local fertilizers like chicken manure and compost making. On side by side, maybe I will talk about it in more details. We have achieved exceptional results, which I wish to share with you here. You can see three different pictures. We have the first one on the left side, the middle one and the other one in the right side. Starting on the first side, on the left side, it's first one, it's under poor, it's a field under poor rain. we faced the several challenges of poor rain and land shortage, where we were having conventional plots and Regen Ag plots. Conventional plots experienced several challenges, including crop failure, totally crop failure. While regenerative plot, we have been able to grow carrots, and some of them survived in such way a farmer was able to harvest around 150 kilograms of carrots and be able to earn around 60,000 Rwandan francs. But on the other side of conventional side, we got nothing from that side. So which shows that normally regenerative agriculture improves resilience against climate variability. When you see on the picture in the middle, you can see the maize. It's a yield of maize. We intercrop the maize with legumes. We have established in the side-by-side plots in different areas of Rwanda, like in Muhanga and Kamonyi districts. And also we have tried to capture every kind of work done and yield obtained. You can see different kind of metrics of yield. So like, for example, where we have seen the lower yield at conventional plots, it's where we harvested 13 kilograms, while on the other side of Regen Ag, we got 105 kilograms. So it means that when you try to extrapolate it to high scale, we have been able to increase a yield from 48% up to 100. It's almost a double to conventional practices for Regen Ag vice to conventional practices. So in the average, for conventional side, we have been able to increase the yield from 2.5 metric tons to 4 metric tons per hectare, while on regenerative agriculture, we increased from 4.2 to 5.5 metric ton per hectare, plus the additional harvest from intercropped legumes. On the other side, on the right side, you can see two adjacent fields. One is Regen Ag, the other is conventional. And above to the obtained yield, also Regen Ag comes with reduce in quantity of input to use, decrease of labor costs, optimization of seed use through precise hole planting and better spacing, and also the benefits of different alternative use of local fertilizers instead of buying chemical fertilizers. In short, for this right, we have seen that regenerative agriculture delivers high yields, lower cost, and greater resilience. Still on the side-by-side plots, on the qualitative feedback we have seen, we have observed that when it comes to germination rates, Regen Ag improved the germination rate from 5% to 25%, which means that stronger crop establishment have been appeared on Regen Ag compared to conventional. Field operation labor cost goes down significantly from 20 to 60. Reduce use of inputs because of use of local fertilizers, and also average yield increased at from 1.2 up to double increase of yield. In terms of quantitative side, we have observed healthier soil, improvement of soil fertility, better crop health, and the vigor of the crops looks good, and improved pest resistance, higher harvest quality, erosion control improvement, decrease dependence on chemical fertilizers. This combines benefits shows that regenerative agriculture is not only improving productivity, but also build long-term resilience for farmers. On the side of the farmers, we piloted with by conducting trainings. Some of the feedback we have obtained from their side, they reported soil fertility improvement, reduction of labor costs. Local fertilizers makes them to reduce the dependence of the use of chemicals. Crop healthy or crop vigor good, and yield quality has been is a point also the farmers has shared with us, and also appreciated the integration of like agroforestry trees in their farm. Of course, challenges they should be there. We have some kind of challenges farmers shared with us, like the issue of mulching materials, which was a bit scarce to find it, especially for those ones who have a very large scale. So we tried to resolve it by promoting on-farm biomass through border planting and cover crops. A mindset shift from understanding that you don't need to till your land. It's also some kind of challenges we have faced with. But that's why we bring the trial plots scheme. Farmers believe by doing, so we show them and then they do on small scale. So we are 100% expecting that from trial plots, they can go to their entire fields. So also in terms of local fertilizers making, so we encourage them to adopt kind of livestock, and also making sure they plant enough shrubs on their border farms so that they can have enough materials for compost making and this kind of liquid local fertilizers. So in brief, these solutions helped overcoming barriers and build confidence in regenerative practices. I think this is my last slide I have. Of course, the work I was talking about cannot be achieved without having the presence of support on the ground. We have a network of farmer support agents on the ground. Those are the catalyst of change in the communities we serve. They are the backbone of our work through empowering their fellow farmers through trainings and financial institution linkage. Today, we count around 308 farmer support agents serving over 58,000 Rwandan farmers. Specifically for regenerative agriculture, these FSAs have been able to deliver training to around 13,000 farmers. All of those farmers have been able to be equipped with practical trainings and established around over 900 trial plots, and also around 13,000 tree seedlings were distributed to them to be integrated in their farm. Of course, we emphasize on strong partnership with financial institutions like Clecam, Inkunga Finance, Equity Bank. They play a key role in achieving our goals through facilitating the farmers to access credits and the saving products that complement regenerative agriculture in general, and also ensuring that the long-term resilience and the financial stability are in the farmers. So thank you so much for listening. Maybe we'll be happy to have some more questions after all of presenters. So back to you, Jenny. Thank you.
Thank you, Desiree and Sophia. Now I am pleased to turn the floor over to Makias from Clecam Ejo Heza, the institution that serves many of the farmers who have been trained in Regen Ag in Rwanda. And just to give a little bit of a background, Clecam Ejo Heza was founded back in 2007 as a cooperative of rural farmers in southern Rwanda. Over the years, it has grown and evolved into a regulated microfinance institution, expanding both the services it provides and the communities it reaches. Since Clecam partnered with Opportunity in 2001, we've been training our FSAs to mobilize and support farmers while connecting them to Clecam for the financial services they need. Then starting in 2023, all FSAs across Rwanda receive training in Regen Ag practices. Makias, the floor is yours.
Thank you, Jenny. Thank you for the presentation of Clecam Ejo Heza. As you mentioned, we only started working with regenerative agriculture in 2003. And we recently have a dedicated regenerative agriculture loan product. Because of that, we can't isolate product specific impact just yet. But we can look at how our agriculture loan portfolio has changed since 2023, when Opportunity International first introduced regenerative agriculture training through the FSAs. Since 2023, 10% of our farmers' clients have been trained in regenerative agriculture practices, and we have started to notice some promising shifts in portfolio performance. If I try to compare the figure that we had in September 2023 and those of September 2025, I can say that on agri loan book portfolio, we have 4.8 billion, while in 2025, we have now 6.7 billion. When we come to the part 30 days, in September 2023, we have 6.5%, and now we reduced it to 3.7%. The percentage of loan book written off in 2023, it was 10.7% due to the pandemic of COVID from 2019 2022, and now we have 8.9%. This figure gives us confidence that regenerative agriculture is commercially viable. It can strengthen farmers' livelihoods while keeping portfolio healthy and resilient. Let me wrap up with a few things we have learned so far and what they mean for expanding regenerative agriculture to reach many more farmers in the year ahead. Many farmers don't have traditional collateral. A guarantee facility would help open access to loan for farmers who are ready to adopt regenerative agriculture. Farmer support agents are essential. They not only build trust and provide training, but also offer ongoing follow-up that help farmers successfully adopt and expand regenerative practice over time. So thank you so much to listening. I am happy to answer any question at the end of the session. Thank you.
Thank you so much, Merkias, and thank you, Sophia and Desiree, for your earlier presentations as well. I feel like we've got a strong understanding now on what Regen Ag is and how it can strengthen resilience for both farmers and institutions. We'll now hand over to Abed, who will share Inkunga Finance experience in promoting agroforestry, which, as we've heard, is an important component of regenerative farming. Abed, the floor is yours, and if you would like to share your screen, feel free to do so.
I think Abed is muting.
Hello?
We can hear you.
Yeah.
If you're struggling to share your screen, feel free to just speak to your slides.
Okay. Yeah. Thank you very much, Jen. Thank you, the team. As the other, they have really shared with their experience. To our side, also, we have started regenerative agriculture since a couple of years ago, but we've started working with the opportunity last year, and we have been really very blessed of the support from opportunity. And for our side, even if we've been linked with the opportunity, we were having some products which have been benefit to the agriculture value chain or regenerative agriculture. That's what I want to speak about. That's longevity or agroforestry. That's add trees. That's the one of our products coupled with the agricultural value chain. The longevity, it is a product which have been really born from the other agricultural loans or green loans, which longevity love of the tree, and in Ozruba, that is a timber processing. Now, longevity, what helps? It helps the smallholders farmers actually to maintain the land or the soil, fertility, conservation, but also having some like livestock fodders, etc. The features of this product, it has some benefits compared to the other products in the agricultural sector, because the loan interest, it is very reduced. There's incentive on loan interest. Where we have loan interest, it is between 15 and 17%. While for the other loans, it is between 18 and 21%. Commissions for other loans, it is 1.5%, while agroforestry, it is 1%. Loan processing, it is a half of the cost of the other loan processing. So that's about the pricing. The repayment, we may give a grace period up to 36 months. And they may choose either for a repayment model that's monthly, quarterly, by semesterly or annual basis. So it depends. But for the other loans, that's 36 months of grace period, they are not given. About tenure, we can disburse up to 5 years maturity, 60 months. And then the eligibility criteria, we may see we should have only be a client of Inkunga Finance, having a plot even less than 1 hectare, we can be eligible. And the amount to be disbursed, it is from 300,000 Rwandan francs up to 60 million Rwandan francs. That is, and the purpose of this loan, agroforestry, is only for labor, inputs, equipment, and in regards in the domain of agroforestry or in the domain of food security, biodiversity conservation, and environmental protection. That's the purpose of this loan. We target individual smallholder farmers, cooperatives, and sometimes associations. Now, this product has an impact not only to financial service providers, but also to the farmers and to the environmental ecosystem. The impact on financial service provider, what you have seen, it is that they need financing models. When we tackle this ag finance or the regenerative agriculture or that agroforestry, it brought to the institution to think about which models, new models of financing, because these are standalone products where banks or financial institutions, they don't have a well-tailored product to this value chain. Again, the impact, it is risk and the opportunity. Transitioning farms may seem like a risky domain, but regenerative agriculture reduces long-term risks, like as others they have said, soil degradation, climate shocks, and it creates stable returns in a long-term plan. But also there is a potential market that has an impact. As you can see on some of the World Economy News, it is seen that by 2030, over 300 billion USD annual will be needed to finance sustainable food systems. So that is a big market to the either in investors, whether impact investment, whether bonds, whether lending, whether the senior loans. That is the market, that is the impact. So that's on the side of financial sector providers. To impact
I'm afraid I'm going to have to interrupt you there so that we have time with all the presentations. I'm so sorry about that. We can share perhaps a little bit more information with the participants after the webinar, what you haven't had a chance to speak about.
Yeah, I'll try to share it.
Great, thank you, Abed. So we will now shift the lens back to the broader business case for FSPs and how Opportunity Ag Finance is supporting FSPs to invest in climate resilience. Sakina will also share a preview of some exciting climate risk products in development. Sakina, the floor is yours.
Thank you. Are you able to see my screen?
All good.
Okay. Thank you so much, Jenny, and thank you all for joining this important conversation. I think Abed as well as Makias have said it all, but I'm just going to give me a minute. I'm just going to add some sauce to it. So my focus today is on why climate smart finance matters, how product design must evolve, the innovations underway, and what our next 12 months look like at Opportunity International. Why should we even talk about climate smart ag finance with financial institution partners? Across all our partner countries, weather volatility is now one of the biggest risks to rural lending, Droughts, floods, and predictable seasons are increasing loan defaults and creating higher NPL ratios. But the same climate pressures are also driving demand for new resilient financial solutions. We heard from Abed, we need to look at this as a risk as well as also as an opportunity. Regenerative agriculture practices like soil cover, intercropping, minimum tillage, and diversified production help stabilize yields even under climate stress. For financial service providers, this translates into better loan repayments and reduced portfolio volatility. There's also a strong market opportunity as smallholder farmers like women groups, VSLAs are actively seeking products that meet their changing needs. With blended finance tools such as guarantees, risk-sharing vehicles, financial service providers can safely profitably expand into this space. So the business case is very clear. Climate smart finance is both a risk management strategy as well as a growth opportunity. What do farmers need and what should banks be looking at? So as an institution, as Opportunity Ag Finance, we are promoting products with longer tenures, grace periods, and repayment schedules that follow rainfall and harvest patterns, not the normal monthly installments. Bundling is also critical. Credit must come with advisory support, like what our FSA model is delivering. So weather information, and where possible, you also bring in insurance. We'll hear in the next slides what we're doing when it comes to insurance. Regen Ag friendly loans also support diversified income, livestock drought, tolerant seeds, intercropping inputs, floating solar pumps, because you might say these smallholder farmers will not afford the asset finance loans, but we're talking of small micro irrigation equipment like floating solar pumps, water storage tanks, and many others. So financial service providers that tailor their products this way, they'll be able to see stronger repayment and improved client loyalty. I think Meki has already shared the evidence of that since they started implementing, or since they started lending to farmers that are implementing the Regen Ag practices. So what products are in the pipeline? We're developing a pipeline of climate risk financial products tailored to the realities of smallholder farmers. We can't continue to pay a blind eye. And this includes parametric microinsurance, which will protect farmers against rainfall shocks. We are piloting this in Malawi this agriculture season with 2 of our partner financial service providers. We're also looking at risk-layered loan structures, that is combining guarantees, insurance, and advisory services, and climate smart asset loans, which I already talked about. We're also promoting agroforestry loans. I think Abed said it all, for tree crops like tea, fruit trees, coffee, and livestock loans, in addition to the training provided by the Farmer Support Services Unit to the farmers. These instruments reduce the risks on all sides. So for the farmer, for the loan officer, as well as for the financial institution partner. As I close, I want to share with you the plans for the coming year. We're looking ahead and we're working with selected financial service providers to pilot the risk loan products and refine them based on the performance data. Internally, we'll support partners to strengthen their credit policies and governance frameworks. On the farmer side, we will expand the basic regenerative agriculture finance training and want to extend that to bank staff and strengthen gender inclusion. We also plan to bring more financial institutions into blended finance structures, enabling safer expansion into rural markets. Finally, we are establishing an M&E framework to track outcomes such as soil health, improvement, yield resilience, and client impact, as well as portfolio quality. Climate smart regenerative agriculture is more than an environmental strategy. It is a pathway to more resilient clients, stronger institutions, and healthier portfolios. Thank you for listening. I look forward to the discussions. Thank you.
Thank you so much, Sakina, for your excellent presentation. We will now open the floor for questions. Please pop your questions into the chat or the Q&A. I'm also pleased to introduce Sophia Beckwith, Opportunities Senior Director of Strategy and Client Success, who will moderate the Q&A. And I believe we already have one.
Yes, we have questions. Hi, everyone. Thanks for all of the engagement on the chat. Abed, we're going to bring you back. I know we had to cut your session short, but Amos Bona from Obol in Uganda has a great question for you, which I think others will be curious as well. Amos was asking, how do you match the grace period of up to 36 months to the loan tenure for smallholder farmers? He's also asked, do you have patient funding lines to match the loan structuring? And if so, what are the tenure of those funds? So a bit of question on the logistics of how you make this happen. Over to you, Abed.
Okay. Thank you very much, Sophia. Actually, as one of the feature of the product, even if I've not given it the conclusion, the partnership first is the one of the pillar which helps us to tackle that issue, whether of credibility or the issue of liquidity. There is a need of impact funds or long-term investment or funds. You know, what you have done as Inkunga Finance, they were commitment of board of directors to actually engage or invest a given amount of money, regardless the rotation of that money, because there's a given percentage which have been availed to support this value chain. But also we look at the partnership with some more partners like ADA, like Rwanda Development Bank, and the other like Labo, even like Opportunity if possible. That's why we come to gain some funds to be refunded within 7-8 years, and then we come to disburse to the beneficial or smallholders farmers within 5 years, and such kind of grace period. And the grace period, it is not given to the all crops or trees. It depends. We do have agronomists, the forestryans, you know, when they assess the business plan, we may say that we give them 6 months, a year, 36 years. That's how we work actually. Yeah.
Thank you so much, Abed. Thanks, Amos, for that question. The next question we did answer in the chat slightly, but I think it would be great to hear from Desiree and Sophia as well. We have Ibn from OISL in Ghana, and he very sharply noted that it's very hard for farmers to change, and that's a barrier to some of the practices. So you can read his comment in the chat, but you know, he's saying the scale and productivity is quite small. It's 5 hectares, may pose some concerns with the challenges mentioned, not quite small, larger. And his question basically was, were these farmers incentivized? And what was done to support beyond the benefits mentioned? So I did write in the chat that they weren't financially incentivized, but maybe Sophia and Desiree, you can speak a little to the behavior change that you saw. I know we talked about the side-by-side plots, but how are these farmers coming to the Regen Ag mission if they're not being incentivized? Would love to hear from both of you.
Yeah, thank you so much. So I think for mindset shift is a problem we have for us Africans. So to introducing new practices like Regen Ag, it takes time, and you need to be strategic to make farmers to be involved. So that's why we started by establishing trial plots. The FSAs are facilitating the farmers to set a small piece of land. For us, we start from like we call it's 1R, it's 10 by 10. So from 10 by 10, they experience the yield. Maybe after one season, they increase the size. With the time, they ended up adopting at their whole plot. For incentivizing, we are leveraging in local materials. For example, these kind of shrubs to be planted on the border of the field, they are available. I think the main challenges is they are not aware. Most of many of them, they are not aware that those shrubs can be a source of either compost or it can be a source of fixing of nitrogen for improving their soils. So we are leveraging on the available resources and also making sure that we are linking them with the available opportunities from other partners and government support, including this kind of nitrogen fixation trees, like different kind of tree species. So there are other partners in the market who are providing these tree seedlings. So we try our way of possible to link them through FSA network with those available opportunities. Yes, Sophia, if you have something else you can add.
The only thing I would add is that I think the mindset shift is a human condition challenge, not just an African continent condition challenge. And I really think it's been central. What Desiree said, it's show by trialing. Those early demo sites gave us an opportunity to know that we weren't telling lies. You know, we trialed it, we tested it, we collected that data. And when we saw neighbors starting to take up practices without trainings, that's when we knew we were onto something in that strategy. And I think that was one of the turning points, at least for me personally, to see neighbors picking up practices without any training and showing up to trainings uninvited. That was amazing to see, really amazing.
Great.
Thanks, Sophia. Thanks, Desiree. I know we're just almost at time. So before I hand over to Jenny, I just want to say for the financial institutions on the call, if you have additional questions, concerns, please feel free to reach out to myself, to Sakina, to Christelle, to your technical advisors, to Jenny. We want to make sure you're getting the information that you need to be able to build out hopefully Regen products internally, but also perhaps work with FSAs if you don't already, or to roll out Regen training with FSAs that you do have if you don't already. So please count on us and reach out, and we'd love to start planning some of these interventions for the coming year from all of the things that we've learned in the last few years with our incredible partners on the call here today. So with that, I'll hand over to Jenny to close us out.
Thanks, Sophia. So we're going to wrap up this webinar. Thank you all for the fantastic engagement and the questions, and a huge thank you to our wonderful speakers, Sophia, Desiree, Makias, Abed, and Sakina, for sharing your insights and experiences. As this is our very first webinar as the Ag Finance Community of Practice, we'd really appreciate your feedback. So I'm going to share a link to a short survey in the chat. It'll take less than a minute to fill it out, and your responses will be greatly appreciated and will help us shape future sessions. We hope to see you again at our next webinar, where we are planning to share some early learnings from our parametric microinsurance pilot in Malawi that Sakina mentioned. So keep an eye on your inbox for the invitation in the coming weeks. Thanks again for joining, and goodbye.